So everyone, welcome along today. Thanks for coming. We have 5 fantastic speakers for you here today. I should say, whenever leisure destinations get built around the world, there's a surprisingly small number of people to whom they turn for advice about whether it's a wise decision to build something. And we're very lucky because we have 5 of those key people here today with us, who are going to be talking about the attractions market globally. We're going to be looking at key trends, the impact of COVID, and perhaps looking at some of the new interesting pipeline projects coming along. So without further ado, I'm going to introduce you to Mike Collins and Yael Coifman. They are the senior partners and founders at Leisure Development Partners. So over to you, Mike.
Wonderful. Thank you so much, Charlie. Charlie and blooloop asked us at LDP to look at the North American and European markets, and we decided to combine those into one presentation. So Yael and I will bounce back and forth through this. And the reason we did that is so many of the challenges that we face at the moment with COVID and so many of the trends and opportunities are common to both markets. So without further ado, we will head into our observations around COVID-19. And some of you may have had a chance to read an article that we did earlier in the year about the long-term impacts we expect of COVID-19. Here we're looking more at what has happened really over this past season for businesses that have reopened. And of course, both sides of the pond, attractions are facing the same challenges of reduced capacity. And you can see in these images, for example, individual seats and coasters being left open. Clearly that has an impact on overall revenues. And we've started to get some really good information about what's going on in both the US and in Europe. How much businesses have been able to contain their operating expenses is of course a huge part of how successful they've been in turning a profit this season. In Europe, some governments have offered pretty exceptional schemes to support cover for staff in terms of furlough packages and so on. So there's a little bit of an unlevel playing field in that regard.
And that being said, to be honest, Mike, I mean, when we've talked to park operators in Europe, a lot of them have had very good seasons. Barring the time they were closed, because the ability of pre-booking, the demand has actually flattened out. So it's shifted to different times and days, flattening throughout the week. A lot of that to do with pre-booking. The second thing that's made it work really well for a lot of the European park operators is there've been very clear communication of COVID policies. Although the policies might change from country to country or from park to park, it's always been clearly communicated to the guests before they visit what are the actual policies that they have to follow. And as a result, a lot of people have felt a lot safer going back to parks when they reopened.
Indeed. And over in the US, with the exception of Disney and Universal in Orlando, we've heard that many regional parks in the US have not been able to approach their capacity limits. Some have been down at 10% capacity or thereabouts, and some as well we've heard from a few have suffered with good pre-bookings, so it looks like they're going to have a great week or a great month relative to the prior one, but then cancellations at the last minute. So some of those pre-bookings not following through to actual visitation, which is causing some aggravation for them for sure.
But one interesting upside that we've seen is actually on both sides of the pond is the increase in retail per capita spend. Parks of different sizes have all said that for some reason when guests are there, they're actually spending more on retail than they did a year ago, for example. And as I said, of all sizes. And that's partially attributed to pent-up demand because people weren't able to go out for a while, but also perhaps because of the lower capacity, it's a more comfortable shopping environment. They're not surrounded by people that are all clamoring for the same fuzzy animal or whatever the case may be.
Absolutely. I've actually talked over the past week or so to a few different attraction types, not just theme parks, and had that same message. Spoke to a farm park here in the UK only a week or so ago, and similarly, they were up about 30% on their retail per caps. So maybe not up overall because the visitation is somewhat down, but doing really well in that area. So capacity and the ability to cope with people is only half the story. We wanted to dig into the level of comfort people have with visiting attractions at the moment. Clearly, the buzz that we've had is that things are picking up and strong, certainly here in Europe. We want to understand why. So we were able to get 2 different sets of data. One on the UK, which is from Vivid Interface, and one on the US, which is from Morning Consult. And these are two bits of primary research asking people how they feel about making a visit to an attraction.
And if you look at the UK one, what's interesting, and take in mind that this was actually conducted at the end of August, so after a lot of the attractions had already been open for a good part of the summer. But the most interesting thing is that the majority of the things that people felt comfortable with were outdoor experiences. Gardens, parks, heritage sites, zoos, safari parks, places where they knew they were safe for outdoors and they could easily socially distance. But the interesting thing here as well is if you look at some of the indoor experiences, such as aquariums, art galleries, and museums, are actually higher than theme parks in terms of the level of comfort. And we attribute that to two things. One is, they were timed entry, so they knew there was limited capacity in them. But the second thing is that within them, the attractions themselves, it was required to wear a mask. So people felt safer. And they also knew that if they had to move away from somebody else, they had the ability to do so, which is different than, say, for example, a theme park, where once you're in the queue, you're kind of stuck. So that was one of the reasons we think it might be slightly higher in terms of comfort level in the UK.
Absolutely. And that US consumer does appear to be considerably more cautious when it comes to the amusement park visit. If we look there, 17% felt comfortable to head to an amusement park in the US at the moment versus 46% in that UK sample. So it's a really marked difference. And interestingly, there are differences along party lines as well. And I'm not going to get into US politics here. It's not my intention. But in that survey, 30% of Republicans felt comfortable to head to an amusement park versus 15% for Democrats. And I think that kind of politicization of the issue has not been experienced to the same degree here in Europe. And it's an interesting thing that I think we'll probably leave there rather than digging into.
Yeah. But the other thing is, okay, so moving on from there, what's sort of the outlook? What are we seeing in regards to the industry as a whole in both Europe and North America? I mean, things are open, things are closed. What is happening? Example, there are quite a few projects we know that are ready to go in the U.S. That would have opened this year, but understandably, they've been put on hold. One very larger case of that is Legoland New York, for example, which was meant to open this summer, but has now been postponed until the summer of 2021. Same thing over on this side of the pond. In Sweden, we know of at least, one science attraction that changed its opening into an extended soft opening, so it could have better control in terms of capacity. It will be, obviously, to a lot of these ready to open attractions to open when they think the market is ready, because there's no reason to take on the risk of staff costs before they know they can actually cover them.
And then speaking of closures, unfortunately, there have been, some casualties of COVID so far. There may be more. We sincerely hope that there won't be, and that if there are, there will be only a few. But with those kinds of challenge, it becomes opportunity for others. So we anticipate a period of some consolidation and opportunities for groups to buy. SeaWorld have publicly stated their interest in acquisition. In Europe, Looping bought into Drayton Manor already, and we envisage potentially more of that to come. So it'll be interesting to see that that's a changing landscape of consolidation over the coming year or so.
And then the final sort of area that we wanted to touch on in relation to COVID-19 is, the rise, the exponential growth in streaming and online shopping and online gaming. As people were stuck in lockdown, they, clearly had to look for other forms of entertainment. And this has become a replacement factor. As an example, Netflix got 60 million new subscriptions just in the first quarter of 2020. Disney Plus launched in November 2019 and reached 60.5 million. That's 60.5 million by August. That was actually their 5-year target. And they did it in 8 months. So I think it's really important moving forward that attractions actually look at this in-home entertainment as another form of competition. Yes, people will want to leave, but they also have more competition at home. So it'll be a struggle to get people off the sofa.
But the positive side to that, we think there's an opportunity. Online entertainment, online shopping are of course having a massive impact, not just on attractions, but on retail. Retail was already having a tough time. Attractions operators and developers were already stepping into the fray there to bring location-based entertainment into malls and so on. And that opportunity is only going to grow for this industry. So, you know, there is a silver lining, I think, to that growth in online entertainment. Moreover, you know, we really believe that retail needs to borrow from us in the attractions industry. We're seeing, and we'll touch upon this a bit in the trends in a moment, we're seeing this growth in kind of experiential retail and brand centers refocusing. And you know, that there is opportunity for us in the attractions world to improve things in the retail world. So that brings us on to trends, and we're going to touch upon a few key trends that we're seeing both sides of the pond, some originating in the US, some originating in Europe.
And the first one is IP. So, you know, IP, intellectual property, it isn't new. You know, we've seen it for years, of course, in theme parks. And now we're seeing it emerge more in other forms of entertainment, location-based entertainment attractions, such as family entertainment centers, water parks, such as the DreamWorks one in American Dream in the US, sometimes in cafes, in hotels. In the UK, we've seen the Shaun the Sheep from Aardman Animation actually go into a farm park. So there's a growth not just in IP in general, but in the locations that it's going these days.
And the types of IP as well. So traditionally, of course, TV, film, and movie. But now we're seeing things like sport clubs enter into that market. Real Madrid taking their brand into China with an attraction concept that we worked on there. Portaventura have announced the work that they're doing to create a football-themed area for the park. Bear Grylls, another example. Bear Grylls being the extreme adventure guy who has a year or so ago did his deal with Merlin to bring his name to their adventure and extreme sports attraction up at the National Exhibition Centre in Birmingham. So we're seeing real variety of the types of licensing deals that are being done and coming into attractions of all scales.
And the final thing we're seeing, which is interesting, is people, you know, consumer products actually turning themselves into IPs, basically. Things that would not have been seen as an IP before are now blending attractions and their retail. And clearly, you know, Lego Discovery Centers did this years ago. You know, they were one of the first ones to really turn a consumer product into an IP and an attraction. But we've seen more recently Mattel with their location-based entertainment concepts, but also some retail stores that are becoming more and more experiential, like the M&M store, and others that are that are going to be emerging soon. So we're seeing this transition of what normally would have been just a retail product into an actual IP.
I do hate these kind of mash-up words, but edutainment is a useful one. Entertainment and education fused, and it's something that's been really prevalent in Europe for some time, and the rest of the world. You know, the Kidzania, starting in Mexico, proliferating through, you know, various parts of the globe, Middle East and Far East and so on, eventually coming to London, now coming to the US. And we're aware of several other really strong edutainment brands and concepts that are heading into the US market, which typically edutainment had been there more around science museums and more traditional kind of museum experiences targeting kids and younger guests. But I think we're going to see a real proliferation of new concepts in North America.
I think another area that we've seen a lot of change recently, and again, this is both in Europe as well as North America, is the reinvention of brand centers. Now, clearly, brand centers have been around for a while. More often than not, an ability for a brand to showcase its history and, you know, quote unquote, how it was made. But they're now taking a step back, and there's an upsurge of people reinventing their brand centers with more immersive experiences. It's not just exhibits and the story of the brand, but it's actually pulling people into the story, into the manufacturing process, and making it much more of an attraction versus a museum type experience.
Another factor with brand centers is we're starting to see them be unshackled from their headquarters or their factory. While it's fantastic to have that kind of authenticity of a factory visit, it can also be very compelling to be where your audience is, to be where resident populations are dense or where there's high tourist traffic. And we're starting to see now these kind of outpost brand homes come into really, major tourist zones and so on. And we'll talk a little bit more about one of those later on when we identify a few projects.
And then the other trend that we've really seen a lot of, especially in the last couple of years and more so in the future, is what we're calling accommodation experiences. So, attraction hotels, they have been around for a while. This is different. In this case, the overnight stay itself is the experience. It's not just accommodation as a way to access an adjacent theme park or water park the next morning. Staying overnight is actually the experience itself. So this one we see right here, this is La Flèche in France. It was one of the pioneers of this experience. You wake up, you see a polar bear looking in your window. That itself is the actual experience. But what's interesting is we're seeing more examples of this popping up. Not just wildlife attractions, which does lend itself perfectly to this, but also some IP-based projects and other things like Live Like a Pirate in Amsterdam, where you actually play at a pirate on a boat for a couple of days. We expect this this is already taking off very strongly in Europe, and we expect it to really start taking off in the US because they can be incredibly lucrative in terms of projects.
I won't be waking up and seeing that polar bear because that room costs about 650 euros a night, and I'm far too cheap for that. I think they're running at something like 95% occupancy with that concept, which is pretty incredible. I think for the key suites there, you can be looking at 3 seasons ahead if you want to book for peak season times. Really incredible. Now, I did say I hate the mashup words. I'm about to use another one, I'm afraid. Apologies in advance. We're now talking artainment. So that fusion of art and entertainment. And that's something that really has taken off in the US particularly. People like Meow Wolf and so on, but several others as well. And there are some great concepts that are permanent. There are some great touring exhibits really fusing art and entertainment and doing it very well. We've seen some interest, of course, in this space in Europe, Atelier des Lumières in France and so on, but it hasn't developed to the same degree yet that it has in North America. And we certainly anticipate that it will do so. We'll do so. We expect to see more openings for sure.
Yeah. But then switching back over to this side of the pond, to the European side, we talk more about competitive socializing. So the blending of games and drinking of dining, again, has been around for a while. There were some leaders in the industry in the US with Dave & Buster's, The Rec Room, Main Event. But this is taking it to the next level again. This is the reinvigorated competitive socializing. In this case, we're looking specifically at a company called Flight Club. And the key thing here is they have very heavy theming and very high quality food and beverage. And in a lot of cases, they are in trendy, expensive locations around the CBD. So that way they're actually able to leverage off office demand during the week, and then the more traditional individual attraction audiences over the weekend. Other examples, as I said, this is Flight Club, but other examples are Put Shack, Swingers, Bounce, which has ping pong, and they've become very, very strong, not just in the UK, but all over Europe in terms of taking off.
In the US, of course, there are concepts that fuse great food and beverage and sports and activities where there's that kind of competitive edge. Topgolf has done brilliantly in the US. One of the key differences with these concepts is the space they take. And these are slotting into, regular retail or restaurant size units and into high street locations. So we talked a little bit earlier about some of the challenges that retail is facing all over the world, or in many parts of the world, let's say. But certainly in Europe, we've got those traditional high streets that have many locations that would be, grand for this kind of opportunity. And we expect to see many more of these concepts proliferate to North America as well.
And then the final sort of key trend we wanted to touch on was the next generation of the indoor water park. And this we've really seen a lot of in Europe to date. Clearly, there's huge interest in indoor water park hotel developments in Europe. It's existed in the US for years with Great Wolf and Kalahari, in Europe with things like Center Parks and Alton Towers as an early adopter of it. But those were the old school indoor water parks. What we're seeing now is a lot more hunger for it, and also a storyline actually actively integrated throughout the water park and the hotel itself. It's not just theming. With the case of Rolantica in Europa Park and the new indoor water park that's going up at Liseberg, they've thought through an entire story and a theme that feed into the indoor water park hotel. And this is, as you said, the next generation of indoor water park that we're really seeing.
We're now going to hit upon a few highlight projects on both sides of the pond that reflect many of the trends that we've been touching upon.
Yeah. So one of these, as we mentioned earlier, is that of the Brand Center. But this is the Johnny Walker new flagship experience, which is actually going on the High Street in Edinburgh. There's no distillery, there's no authenticity, and that would have been a challenge in the past. But they're actually they're investing 185 million pounds to basically convert what used to be a former department store. And part of the goal here is to boost tourism and brand loyalty, and specifically bring tourists to a part of the town which they might not have gone to otherwise. So it is part of a strategy to kind of spread out tourism in what is already a very popular city. The other key strategy is that once people are there as their flagship, they can then send visitors to their more remote locations, to the actual distilleries that are all associated with Johnny Walker and Diageo. So that's one example of how things have switched a little bit. We're all very excited about it when it finally does open. It's under major construction right now.
And London Resort, a little bit closer to home for us, it's moving forward at pace with some great IP from film and TV, and really blending many of those trends that we discussed earlier in terms of creating that destination, pulling in fantastic hospitality, bringing in great themes into the retail, dining and entertainment zone. And I think it's pulling upon a lot of key trends in the industry right now. We certainly hope to see it open in the not too distant future. And then Area 15 in Vegas is something I'm really excited about. And that really is blending pretty much everything that we've spoken about in the session. You've got fantastic food and beverage that reflects some of that quality of competitive socializing. You've got high tech, you've got artainment, really experiential retail going in there from what we see. And it's a great example of a cluster of a lot of emerging trends and experiences in the industry. And something
they even have a whiskey distillery. So they basically, I think they've hit everything we talked about. So with that, we just want to say, thank you. That concludes our presentation. And at this point in time, I'm going to hand it over to Christian, I believe, who will be doing the next bit.
Fantastic. Yael, Mike, thanks very much for that. There's some really exciting new projects on the go, so a lot to look forward to there. So as Yael mentioned, we'll now be hearing from Christian Aaen over in California. And he's a principal and partner at Entertainment and Culture Advisors, which, like LDP, goes by its acronym ECA. So I'll now hand you over to Christian.
So thanks very much, Charlie. It's great to be on. Good morning, good afternoon, good evening. I'm based in Los Angeles, and it's great to be here with Yael, Michael, and Philip as well. I'll cover basically briefly about Asia Pacific. About a snapshot of key markets in Asia, touching upon some of the impacts of COVID-19 in selected markets, a few key development trends, how we see it in Asia. There are some similarities to what's happening in Europe and North America as well. Then a couple key summary points and outlook, and then some pipeline projects to watch coming up in the next 3 to 5 years. As you know, in terms of Asia Pacific, of course, it's a very large and diverse region, a very large population base, and very different income levels in different countries. The region has been urbanizing very fast, but there's also a pretty high rural population in certain markets. The biggest markets by far, of course, as you know well, would be China, India, and Indonesia. in terms of scale for attraction development. The region has gone through a kind of a similar cycle to, I think, Europe in terms of COVID-19. And some countries have done better than others. I would say in China, they acted very quickly. Same in Taiwan and in South Korea and Vietnam. They've probably done the best so far in Asia Pacific. For attractions, they really looked at kind of limited capacity in the short term at 20-25%, then moving into 30%, up to 50%. And just this week in China, they're beginning to open up at 75% for kind of scenic sites going into the national holiday next week in China. But in terms of the impact, I mean, definitely there has been quite an adverse impact, to be honest, in terms of attendance and revenue drop. We talked to a number of leading international operators and also kind of local domestic players. And it seems to be in the range of like 50 to 90% kind of decline in the short term. And hopefully now things are getting better kind of on the other side. But it really comes down to a specific country, of course, and market location. As I mentioned, China is reemerging quite quickly now. They are benefiting from a large population base. Certain markets that are more dependent on international tourism, like Hong Kong, Singapore, Thailand, and also Vietnam. That will take a little bit longer for them to come back. And a lot of governments in Asia Pacific are giving incentives to attractions to kind of come back. For example, in Hubei province, Wuhan, they will basically subsidize tickets, free tickets until end of the year in December for scenic sites to kind of boost and build back visitation and confidence in the market. And in terms of some of the key development trends, I mean, we've seen a lot of investment and growth, of course, in Asia Pacific over the last 10 years. And it's been led really by some of the more mature markets. So Japan and Korea are quite established, Australia as well. But in China, a lot of investment by domestic theme park operators and also international brands coming in like Shanghai Disney. Chimelong has made major investments into their parks in southern China, and also some of the regional players like OCT, Fantasy Wild, and Evergrande, Sunac expanding in the domestic market. But in terms of some of the key product categories, we're still seeing theme park destinations, of course, multiple gates. It's really going from the 1 day to multi-day stay, and having the integrated kind of themed accommodation that Yael touched upon as well. And Michael is also, we're seeing that a lot more in projects being integrated into the product offering. We're also seeing a lot of LBE, kind of indoor attractions. That's continuing. Same trend in US and in Europe. And there is definitely a culture, a habit of people in Asia going to shopping malls. That is kind of the urban city center. So it only makes sense to kind of enhance that to more experience-based. There's already a very strong focus on F&B offering in malls in Asia. We've also seen some refined and expensive IP. So some rethinking of certain concepts in the VR space. Also, we're seeing more projects in the adventure kind of sports IP category that Michael talked about, with Bear Grylls and certain kind of football clubs or NBA as well. Another key trend, similar to what Yael mentioned in Europe and US, on brand home and kind of corporate visitor centers. That is a growing kind of niche category. We see a lot more focus on that in the last couple of years, in particular in China. And I have a few slides a little bit later on some projects coming up on that. We're also seeing kind of esports. There's a lot of interest in China, in particular on gaming, online gaming, and taking that into a physical kind of out-of-home entertainment space as well. And then finally, a lot of kind of programming and kind of pop-up experiences. We've seen that in the US. That is also happening a lot in as well. Just a couple of points in terms of how we view the next several years in terms of outlook. So I think, I mean, we are seeing a continued kind of impact of COVID-19 during 2020, 21. that there will be in the short term some kind of shift in the travel patterns and preferences to build up the consumer confidence. So we think it could last into 2022 and 23 at a certain kind of percentage of 2019 as we build up kind of safety and comfort levels. And possibly by 2023 or 24, we would expect a more of a kind of rebound resumption to what we were seeing in 2018, 2019. So this has some implication, of course, for the attractions industry in Asia. So that could be some consolidation of major players, developers, operators into bigger groups, acquisitions. At the same time, we will see probably more of the indoor kind of lower capex, scalable projects versus the just a pure theme park and high investment mega parks that can take 5, 10 plus years to actually build. So a key focus on kind of the urban mixed use experience projects. Another key trend we are seeing in Asia, and that really started with Singapore integrated resorts with Marina Bay Sands and Resorts World on Sentosa, is the IRs. And in Japan, there's a big effort over the last more than 5 years on bringing in three kind of integrated resorts. Very high investment between $5 and $10 billion that will have a key focus on kind of leisure, art, and entertainment. Other countries, Korea is also looking at that at Incheon, but more for international tourism, Philippines as well, and Vietnam, Cambodia. At the same time, we're also seeing developers and operators looking at more kind of premium experiences, higher price, lower capacity, and a better yield, more kind of immersive experiences, and also a focus on kind of outdoor settings. But I think, I mean, in summary, I think Asia is showing us the way post-COVID-19 should be COVID-19, reason for optimism and still strong demand outlook going ahead. Next, in terms of some key kind of pipeline projects, here's kind of a quick summary how we see it in Asia Pacific. And I have a couple of slides I'll share. Just to mention, in Hong Kong, Ocean Park, of course, competing there with Hong Kong Disney. That's also kind of the next generation, what Yael talked about in Europe, in Germany and Sweden, expected to open in 2021. And they were also adding more kind of themed accommodation at Ocean Park. In Korea, Shinsegae Group, which is a big retail department store operator, they're planning a big destination resort just outside Seoul that used to be the site for the Universal Studios Korea project. So that's one of the big projects in Korea. And then in Southeast Asia, I mean, Singapore is committing to reinvesting with the IRs into Marina Bay Sands and also Sentosa, Universal Studios, into more attractions, expansion of that. And I think in Vietnam, we're also seeing by domestic operators like Sun Group and Vinpearl investing in water parks first, amusement parks, surf parks, and also some indoor LPE. And just to give you a quick highlight, a project that we worked on, actually my first China project 20 years ago, is the Universal Studios Beijing project. Similar to Shanghai Disney, this will be in the mega park category, very high investment. They're estimating, I think, more than $6 billion, multiple gates. So this will definitely be have a major impact, positive impact, we think, in China in terms of raising the bar and the tentpole for the industry. So that's a very exciting project coming up next spring in Beijing. Over in Japan, there's a major expansion underway for the Nintendo World. It's a great IP, very strong in Japan and internationally, so kind of integrating that into a new land. And it's really building on the success that Harry Potter Wizarding World in Orlando and then in USJ set as a standard. And it's very high. So that's going to have a big impact, I think, on Universal Studios Japan. And then, of course, our good friends at Merlin and Lego, they continue to expand. We've been quite busy with them in Asia over the last 10 years. In Korea, finally, we're seeing the Legoland Korea project coming up in 2022, 23, just outside Seoul East in Gangwon province, approximately 1 hour outside. So that will be a theme park and a water park and a hotel as part of a resort island. In China, Merlin has a key focus on expanding the Legoland Park brand to at least 5 locations. So they have Shanghai, Beijing, and Chengdu underway, southern China, and a few other locations in the pipeline. And those will be part of kind of integrated theme park destinations with a key focus on extending length of stay, on-site accommodation as well. And then in the kind of brand experience category that Yael might touch upon as well, in China, a key project coming up next year with the French Paris-based Pernod Ricard will be the first kind of whiskey distillery attraction. I'm quite excited by this one, outside Chengdu in Western China. It's next to a very beautiful top kind of 5A scenic site called Mount Emeshan. And it will be a working kind of production site because of the fresh air and the great kind of water quality in that area. And it will have a visitor kind of facing component, a tour as well. But it's specifically made for China market, a new brand that they're coming up with. So we think that trend will definitely continue in other countries in Asia. Another key project, again, with a European operator, Eden project, coming up in Qingdao in Shandong province. This is part of almost like a new city as kind of the key anchor for that project. I think the total project will have a population of around 250,000 people over 15 years. So one of the big kind of master plan project. And this Eden project from the UK will have kind of water and sustainability as a key theme. And we think this will be a quite important project to showcase kind of sustainability in China as well. And of course, our good friends in France at Puy de Fou, they're also expanding internationally. They went to Spain, I think, last year. And we've been working with them on a project quite exciting by the Great Wall, actually out in Hebei province, outside Beijing, out on the coast where the Great Wall actually begins and going out into Beijing. So it's pretty amazing backdrop of the park that will have kind of show-based cultural shows and a nighttime spectacular, similar to the Cine in France. Another key project that's coming up is based on Warner Brothers' Leavesden project. This is a amusement park that has been on for decades, that's now being redeveloped. And I mean, in Japan, it's probably one of the best markets in terms of international IP, high spending on that kind of movie studio. So we think it's a great fit. Of course, you have Universal Studios in Osaka, but this will be a different product in kind of the walkthrough studio tour category. That's coming up in 2023. And then finally in Hong Kong, we have a major new project coming up with K11, New World Development. And this follows kind of the, also not to use the acronym, but Artainment, that's been a key focus for their K11 projects in Hong Kong and China, mixing in more experience-based art museum. But this Sky City project by the Hong Kong airport, this will have a pretty high percentage dedicated to leisure, entertainment, and experiences. So we expect 6 to 8 attractions to be part of this project. Several international brands you know quite well will be part of this project. So we think this will set a trend for other projects in the region. And this also kind of follows what's been happening in Singapore at Changi Airport, you know, Project Jewel that just opened last year with more kind of experience-based projects. So I think that is my last slide, and I think I'll turn it over to Phil to talk about the Middle East.
I should say Christian was speaking through a construction process going on outside his house, so that's why he occasionally sounded like R2-D2 for a few minutes. So,
right.
But yeah, so
thanks, Charlie.
Yeah, no worries. And Christian, I was going to say, because you unfortunately can't join us for the live Q&As afterwards. What are your thoughts about the future of megaparks in Asia?
Right. I mean, I think we will definitely still see, because of the stage of development in Asia Pacific, there is room for several kind of major megaparks, basically in China, in southern China, western China. So maybe Universal Disney or other studios would be considering that. We think Japan is also a big opportunity. And Korea is also looking at a couple of projects. The Shinsegae project, it may have a major brand, possibly, to be determined. And I think Indonesia as well has a great population base for major kind of integrated theme park destinations. And then finally, I think India, for sure, that's a big market everyone is kind of looking at next in the next 5 to 10 years as they build more infrastructure and incomes are coming up. So we think there's definitely great potential for those bigger projects as well.
Fantastic. What about sort of more product development?
Sure. I mean, we'll definitely see more of the kind of indoor LBE that Yael Mike talked about in Europe and North America, that will continue. I think integrating kind of consumer brands. And I think that brand category experience, corporate visitor center will also be a key focus in terms of new products. In also urban markets, for example, Pernod Ricard just opened, I think this week in Shanghai, a kind of retail experience in Xintiandi to be kind of an outpost for the upcoming brand center in Chengdu. So that's kind of another trend. And then Sky City, as I mentioned, as a project, that is also kind of highlighting the indoor entertainment focus and brand experiences as well. Yeah.
Thank you, Christian. So
Sorry.
We'll now move on to our final speaker for this session. That's Philip Shepard. He's the chairman of International Venue Management, which I imagine will soon be called IVM. And Philip is going to talk to us about the Middle East, where he lived for a long time while working for PricewaterhouseCoopers. And so, Philip, please share your slides.
Great, excellent. Well, thank you very much, Charles. It's great to be on, and I've learnt a lot listening to everyone else, so thank you very much indeed. Clearly, the Middle East is a less mature market than the others, and of course, it's enormously diverse. And I think most of what I'll try and focus on is what's going on in the GCC, the Gulf Cooperation Council. So it kind of excludes Iraq and Iran and the Levant, so Jordan and Lebanon. And really, the attractions market was only really kicking off there from about early on in this decade, so 2014, 15, 16, with some large parks being launched, and that was principally led by Dubai and Abu Dhabi and the UAE. So some of these trends that we've faced haven't quite as developed in this market, but like everyone else, COVID has had a big impact. If there's only one silver lining for many of them, it happened just as the summer season was beginning to wind in. So it didn't and had such as larger impact as it could have done. Probably Dubai was hit the worst. But they unlike what I guess the Asian experience, where people had these pandemics before and kind of adapted quite quickly, the Middle East went into quite a hard lockdown and a long lockdown, and for many of the parks, they're only really just beginning to open this month, pretty much as we're coming now into the autumn and winter season, which is obviously peak time for them, and tourists certainly into the UAE are beginning to be encouraged to return, but it's a challenge because quarantine and etc. is going on. So I will just run through a few slides to come give a bit of an update of what's going on in those key countries, and I'll then pretty much focus on the UAE and Saudi, which I think is the real main game in town. Great. So just sort of a quick summary of the key things that are happening. I probably rather optimistically said post-COVID. Clearly that's still going on, but clearly as we're sort of moving, hopefully out of the worst, and sort of sticking with the UAE. So to be honest, with the UAE, main parks like Dubai Parks and Resorts, IMG, Warner Brothers, sort of kind of opened since 2016, and actually pre-COVID, they clearly had a challenge in really penetrating the tourist market still. So I had quite a good domestic usage, but the plans were really heavily dependent on getting through the tourists. And so really, for those parks, I guess the jury is still out to how they can get the visitor numbers that were planned. They are very substantial and will rely on large tourism numbers coming back. And if you think that Dubai, small population of maybe 2 to 3 million had tourists coming in at 16 million, you can see how important that was. So I think it'd be fair to say that there'll be many plans in the UAE. Many of those have been mothballed and frozen till the tourism numbers return. The Aaen Dubai, which you may have heard of, is they're going to be the largest sort of Ferris wheel in the world. That is pretty much built. I think they're putting on all the bubbles at the moment. Madame Tussauds was due to open this year. I think it's still hopefully scheduled sometime this year, and being built at the moment is SeaWorld in Abu Dhabi. But really for the tourism sector, the entertainment attraction side of it is probably less of a priority. It doesn't get the same government sponsorship that you might have had in certainly Dubai, that you would have seen in some other countries. But the real focus is on restoring that kind of traditional sun and sand tourism. Massive hotel stocks in the UAE that need filling, and clearly the priority of Emirates and Etihad is to get tourists back into the country. The other Emirates are smaller, but Ras Al Khaimah is quite interesting because it's managed to be kind of come through the COVID period relatively well, and has focused on a more of an adventure tourism side to supplement their sun and sand. And we talked about Bear Grylls earlier. Well, there's an adventure training camp that has recently opened in Ras Al Khaimah. I guess for the UAE and for Dubai in particular, it was supposed to go on now, was the Expo 2020. Huge amounts of investment in building the infrastructure in Dubai, huge expectations of the tourist uplift that would have brought. Now postponed till next year, and a lot of focus is going to be put on making that a success, and hopefully get the countries back on their feet. I'll go into a bit more detail later, and also into KSA in Saudi Arabia. But those of you who follow Saudi will know that the Vision 2030 that was launched 2 or 3 years ago has kind of been the platform, the flagstaff against which the country is rallying as it's looking to diversify from its oil-based economy. And while clearly the lockdown and COVID has had a double whammy impact for Saudi, because the oil price kind of fell from an average of 60 down for a while down to $10. It's probably now around 40, and also it kind of locked down the country. It's very clear that much of the foundation of that vision is still relevant, and it's extraordinary the rapid change that has already been made in the country. In terms of opening it up, the ability for men and women to socialize together, and women driving, etc. It's within an 18-month period, this has changed quite dramatically. Part of this vision was really to try and focus on creating a domestic tourism industry, because so many Saudis would go elsewhere, to Europe or to Dubai. Interestingly, the silver lining from COVID has been that the domestic tourism has actually occurred. The locals have really begun to explore their own country. But there are some giga projects, which I'll talk around later, which have been, you'll have heard tons of PR about these eye-watering numbers, but they remain the priority, and money is flowing into them to get them going. And one thing, again, has been really interesting there is that they've focused on creating seasons for cities and around religious festivals. These are sort of music, concerts, art, events, and again, very fortunate that the COVID lockdown occurred really when these seasons had just finished. So they managed to get at least one whole year through. They were hugely successful. I mean, I was in Riyadh for theirs, and the streets and the boulevards they created with this was humming. It was just extraordinary compared to nothing would have happened 2 years before. Qatar, its kind of real challenge is that it's out of the GCC fold. The diplomatic standoff remains in place. Qatar is of course phenomenally wealthy, so it can sustain that. But for its leisure and attraction and tourism sector, it does it had relied on people coming through from the GCC, which is very hard to do. I think you can only really get there now from Oman and Kuwait directly. It has its own major mega event coming down the track, which is the World Cup in 2022. So big focus on making that a success. And given that possibly the interaction between the UAE and Qatar still has not been kind of sorted, it's going to have to do a significant amount for itself. It had also begun to invest in attractions, principally in their mega malls, and a number of these still need to bed down. So Qatar is kind of a bit separate to everyone else. There's things going on, but it's hard you kind of have to treat it differently now to the rest of the GCC. And at the bottom there, I've lumped a few other countries, Kuwait, Bahrain, and Oman. Probably limited action. Oman might have been the most interesting. It's a beautiful country. Also had to sort of diversify away from its oil revenues, and had lots of plans kind of in place. I'm sensing that many of those have been scaled back or pushed a bit further down the track. And I think for anybody who's a Middle East watcher, it's always been the greatest frustration, but also the largest opportunity is Egypt. It's by far and away the largest country with 90 million, clearly a lot poorer, but there has been some huge developments now going on, particularly sort of New Cairo, and some of the UAE developers are beginning to build these mega malls, which is, I think, really beginning to attract probably an FEC opportunity, family entertainment centres, and also clearly a lot of activity going on in the museums. So just picking up just very quickly on the UAE, for those of you who are not so familiar with it, I kind of seeing this really as sort of 6 key clusters have kind of been developed. Dubai Mall, finished in 2008, has been the leader and has sort of, I suppose, more accidentally discovered the value of the family entertainment centre, the location-based entertainment within the mall. These things that were there really just to add something that was kind of might draw some people to the retail sector, have become really successful in their own right, and sort of led email Runda has kind of led the way. I briefly talked about Dubai Parks and Resorts, and that has kind of, I think only Motion Gate there has now reopened. But that main mission really going forward is to sort of really make itself attractive and presentable for the tourism market, plug into that as a destination for tourists to come. It was doing pretty well with the local markets, and people who familiar might have known that there was going to be a 4th park, which was Six Flags, and that project now has been cancelled. City Walk, this was developed by a developer called Miras. City Walk is it seems interesting to try and create a sort of high street feel in a climate such as Dubai, but this is what City Walk is. And they had one of those Playtown, and I think they had a Hub Zero. I think Yael mentioned they might have closed. They certainly closed. Whether they will reopen post-COVID, who knows. Abu Dhabi, a little bit later to the party, but Yas Island has seen some significant development. Ferrari World, the foundation theme park there. Warner Brothers opened really probably just a year before, about 2019. SeaWorld coming, and a very successful water park. And Saadiyat is next door, really a cultural centre with the Louvre already built, and Guggenheim hopefully will be coming in 2023, long delayed. And Blue Water is a sort of man-made island off Dubai, where the Dubai Eye, the Aaen Dubai will be built, and Madame Tussauds. And probably beyond that, that's kind of where the UAE is probably going to stick for a while until it gets its tourism numbers back to where they were before. We talked quite a bit about this the location-based entertainment trend, and I guess you'd say the UAE or the whole of GCC really this is clearly a major opportunity for them, because it just plays into the fact that they already have huge malls. Malls are probably more than any other country the kind of community place because of the climate. Dubai Mall, I think, gets about 80 million people through a year. Extraordinary numbers, and they have been a gannet for IP. So really, across the entertainment and every other mashed up word that you can think of. Michael was talking about edutainment to IP themed sports and adventure, really trying to play a lot in that. And to be honest, the climate and the nature of these tend to be a bit smaller operations, of course, tends to play better to a domestic audience. So I think, again, some of these many of these are closed at the moment and reopening gradually as we come into the autumn and winter season. But certainly the work when I was at PwC looked at sort of the opportunity for this location-based entertainment in the region, and we saw a substantial amount. It was pretty under-penetrated relative to some other countries. So really, kind of, as I say, the real game in town now is Saudi Arabia. It's a substantial country with over 35 million people, and of course a substantially wealthy country, and really had no interest until a few years ago in a tourism market at all. It had high volumes of religious tourism, I would say, people coming on Hajj or Umrah to go to Mecca, Medina, but limited elsewhere. And it is an extraordinary place because, you know, it's not just Riyadh. It's got you know, a huge length of Red Sea coast, so opposite Egypt. So it's amazing sea and beach zone. Plus on the other side in the Persian Gulf, and it's got mountains and also huge amounts of historic and cultural and artistic things. So totally underexploited and unknown really to the rest of the world. So Vision 2030 had some really ambitious milestones in there. I mean, I'll stick with the bottom right one, which was 64 billion was allocated, and they've not really adjusted that figure yet. But huge amounts to be spent, and I'll talk a bit later on what they plan to spend that on. There was no cinemas in Saudi Arabia a few years ago, so planned to get 350 cinemas in place with over 2,500 screens. These 20 entertainment centres, which are probably, interestingly, a bit ahead of their time, because now, as we've seen what's happened with COVID and the impact on retail and how really developers are beginning to cotton on to the fact that many of these centres need to be more leisure and entertainment led than retail led. This is kind of really where Saudi's heading for these big centres. A lot of work to be done on their archaeological sites and their museums. I mentioned earlier these events, so probably from very, very few events, looking to get to about 5,500 events. About a couple of years ago, they're probably at that now. You'll have heard of the main ones, the Anthony Joshua fight, Formula E, some concerts, etc. But huge amounts of stuff going on when they do these seasons. So it is ambitious. There was a fear, I think, in the industry that the COVID would put all this back on the shelf or in the back burner. But no, it's very clear that the country thinks that getting into the entertainment leisure sector is going to be critical for its future, and money is being allocated. And this comes through this major public fund, the PIF, Public Investment Fund, that is sponsoring a number of these giga projects. And I'll quickly just trot through the main ones that I think are relevant for the attraction centre. Some of you may have heard of Qiddiya. This is an enormous site, about a land area about 300 square kilometres, about 50 kilometres outside Riyadh. It's been talked about a lot. It's taken quite a long time to get from page to spade, but construction work has started, and phase one is being developed. And they are really, it's a 10 billion investment covering the themes that I mentioned. They're looking to build parks and attractions, focus on building arts and culture, sports, wellness, motion and mobility, entirely sure what that means, and nature environment. But it's really a big entertainment location, and I guess it's going to be the flagship for Saudi Arabia's development in the space. The sort of flagship things that they've announced already is Six Flags, so a theme park built there, and part of this sports is building a Grand Prix circuit, and Formula One will be coming to Saudi Arabia when that's completed. So not dissimilar to the Abu Dhabi Yas Island model. So I feel very confident that this will progress, and it is moving ahead. Part of the funding from PIF is into 7 Saudi Entertainment Ventures. This is the government-backed investment, development, operation arm to sort of support both these major giga projects, but also all the other cities. And they are looking to build 50 cinemas, a couple of theme parks, and 20 of these kind of major entertainment centers. The cinemas have done in partnership with the American brand AMC. I'll be speaking to Damien Latham, who's running their attractions business later on in this conference, so he'll give a lot more detail of where they're at and the opportunity there. I briefly mentioned Saudi Seasons, which has happened last year, hugely successful, 11 festivals across many of the main cities, focusing on religious days going throughout the year. This covered sports events, culture events, music events, street parties, etc. And Formula E was one of the activities. There was 2 races that were held, and that is hopefully still going to go ahead for the next season. So that worked extremely well, and obviously many opportunities for providers of specialist shows and activities there. And then finally, just the last 3, maybe less wholly relevant to pure leisure and attractions, but clearly there will be a lot going on there. I highlight the Al Ula project. I think this is incredible because it is an area that is like Petra, the same civilization and tribe that ended up building Petra would also lived on this side of the Red Sea. They have been running a series of events during the winter season, quite bespoke and quite exclusive because there's been limited accommodation, but that is a lot of investment now going into accommodation and to bringing and opening that up for events, concerts, shows, etc. You may have heard of Neom. Again, eye-watering numbers, a whole new city, but really trying to be like the city of the future based on the most highest tech, renewables, and kind of entertainment focused. Possibly thought of as a pipe dream, but construction has now started, and there'll be a huge entertainment and attraction component to that. And I'll sort of wrap up with the Red Sea project. Again, highly ambitious building of luxury hotels across, I mean, there are actually 90 islands, but 22 of them are going to be developed off in the Red Sea. And again, after lots of talk, construction has started and key infrastructure is being built. And I mean, this will be a huge development. So Saudis have the money, they have the ambition and drive. It's not an easy place to sort of do business in. We're very culturally quite different to what many countries will be used to. But clearly, if you're in the attraction sector and you've got something that is of interest, it's certainly a place to be focused on. And Charles, I think that's me covering the Middle East. Thank you very much.
Thank you very much, Philip. That was absolutely fascinating. So lots to look forward to in the Middle East. I think all that remains to be said is a big thank you to all our speakers today. So Mike, Yael, Christian, and Philip. I should say all our speakers are on our platform. So if you want to send them a question directly, they can respond to those. And they'll also, apart from Christian, who can't make it, but the others will be around for a live Q&A straight after this session. So thanks again, guys, and I'll see you all soon.